All right, what's up, guys? Good morning, good morning. Let's do a quick sound check here in the Essentials room and then over on YouTube. Hey, what's up, Andrew? We got some rain coming today, Andrew. Good morning, Omer, Peter, Mike, GC, Renee in San Antonio. Renee, are we a Spurs fan? Good morning, Terry, Micah. All right, guys. So, as always, hope you had a good weekend. I hope your football team of choice took home the W. Now, as we head into this week, I think the biggest thing to keep in mind, and it's not my favorite, but we got to be mindful of it, we don't really have a trend to work with. And as I say, the trend is your friend. We don't have too much of a friend right now. You had it May, June, July. And that's the thing about the trend. We don't really have to, at least me personally, I don't care too much about the direction. Are we trending higher? Are we trending lower? As long as we're trending, we can make some pretty good headway. So May, June, July, we've got some beautiful trend action to the upside. And then entering August, that all kind of came to a screeching halt. You had the initial flush. So we're all kind of thinking, all right, maybe a bit of a downward trend here, but we're just stuck in chop. We are stuck in the chop. So this can make your swing trading a lot more difficult, both to the upside and to the downside, being that if you look at the S&Ps, you look at the Dow, the Qs, the small caps, you can even look at the RSP, RSP being the equal weighted index. Which, mind you, is not in the best of shape here. But point being, for both longs and shorts, we don't have any crazy wind at our back. And you had that in May, you had that in June, you had that through most of July. So I think when you make that transition, we go from an uptrend, a downtrend, to a bit more chop. There are a couple of adjustments you want to consider making. Let me get my my notebook here. All right, when the market lacks trend, I think one thing you want to do is be quicker to take your profits. My favorite kind of swing trading is, a great example would be Pinterest. My favorite kind of swing trading, and I'm sure all of our favorite kind of swing trading, would be something like back here in June. Here comes Pinterest. Really nice daily squeeze. We've got the buy signals. And at the same time, the market is perfect. There's buy signals, there's momentum, there's squeezes firing. In that kind of setting, you can take a name like a Pinterest, you can take that daily squeeze, and you can try to play that for a really outsized move. Something that might last for 1, 2, 3, 4 weeks. It's just so important to recognize that it has very little to do with Pinterest. It has everything to do with the market. Then you take Pinterest from about a week ago. You get the same setup, right? It's a daily squeeze, daily buy signal. You got good momentum. Everything checks out. It all checks out just like it did back here. Difference in this market, the S&Ps don't look great. Things aren't super bullish. Things aren't super bearish. We're not in a trend. So then what can happen is you get that Pinterest signal, and instead of a rally that might last for 2, 3, 4 weeks, you might be playing that how we played it last week. You buy it on that bar, you catch a nice push towards 29, and then you cash out. You're not looking for that multi-week move until the indices actually make some progress. So I think you want to be a little bit quicker to take the paycheck. And then the second thing here would be, think in terms of account management versus trade management. How do I spell management? Manage. We'll rock with it. So what I mean by that is, a lot of times, mentally we put so much emphasis on the current trade. So if I wake up today and I buy calls on, say, Google, those Google calls become they become a piece of my identity. Like I'm walking around with those Google calls just strapped onto my forehead. In this kind of market, you want to think a bit more about your overall account. And sometimes thinking about the well-being of your overall account can actually be a little bit frustrating. And what I mean by that is last week we had some calls in Walmart. And Walmart's a beauty. In a good market, you throw me something like Walmart, daily squeeze, bunch of buy signals, bigger squeezes, all the good stuff. I'm looking for a 10% position size. That's how good I think that setup is. We bought it last week. We took it off the following day for break even. Had nothing to do with Walmart, meaning at no point did Walmart have sell signals. Did we have issues? It remained a perfect setup since we bought it. All right, but trade management versus account management. I was loving the action in Walmart. I was not loving the action in the sector that Walmart belongs to. XLP. XLP looks like it's a dumpster fire. I was not loving the action in the S&Ps. Breaking under the 50, breaking under the 21 EMA. So point being, in that moment, I'm thinking a bit more account management. Not making it all about that Walmart trade. I love Walmart. I don't love what I'm seeing in the S&Ps, the Qs, the small caps, the sector. Taking off Walmart for break even though in hindsight, it would have been a profitable trade. Taking that off for break even last week, guaranteed I finish the week having moved the ball forward. All right, so it's the net results of your combined trades versus just that one given trade. Walmart was break even. All right, so Walmart was a big BE. We lost, I think, 30% on BTU. And on Pinterest, we made about 60%. Taking off Walmart for break even. When I'm not loving what I'm seeing in the markets, the stocks, guarantees between the three trades, of which only one of them worked, we finished last week with a profit. And we did the math. If you're risking about 5% of your account per trade, which for me is pretty much the sweet spot, if you took each of those three trades last week with that 5% risk per trade, even though only one of them worked, you grew your account by about 1.5%. And for those of y'all in the mastery, we threw that spreadsheet together, and you saw how powerful 1.5%, 2% can be over the course of 2, 3, 4, 5 years. So the point I'm trying to make is there's a time and a place, and it's my favorite time and a place, but there's a time and a place to really go for it. And by go for it, I don't mean we're being stupid and we're taking, silly risk and we're not managing our accounts. By go for it, I mean you're waking up, you've got the ultimate wind at your back, you're looking for as many of your go-to trades as possible, and you're going to trade them with a bit more size. As options traders, that's where our accounts can really move forward. You get a 10, 12 stretch, a 10 or a 12 week stretch like that, you can really do some positive damage. When the transition begins from trend back to the chop, typically for a lot of traders, that's where they give back all those profits. I don't think too many of us have a tough time making money on the way up or on the way down. We don't have a tough time making money during a trend. Just as easily as we can make it during the trend, I think it's like 10 times easier to give it back during the chop. So back here, I'm in attack mode until we actually have a trend to work with. I'm more than happy to crank out a good 1.5%, 2% per week. Keep moving the ball forward, protect all the profits, and then we get into a better market. And then again, you up the ante as far as aggressiveness. So a few things for y'all to be mindful of. But I do want to show you the futures here. We are getting a bit of a pop this morning. S&P futures up about 0.5%. The QQQ futures up about 0.8%. Small cap futures up 0.6. Let's check the Dow, the almighty Dow. The YM's only up about 0.25, but a little bit of green. So as far as trade selection, right? If you look at the scoreboard here for the futures, and again, this is what makes, until this changes, this is what makes swing trading right now just so much harder than it was a few months ago. The scoreboard is tied. By default, that tells you, be a little cautious. Don't be overly aggressive. Don't trade with huge size. And understand, you might get long today, and you might wake up tomorrow and have to get short. Right? Nobody really has the edge as far as momentum goes, as far as the structure goes. 2 points for the Bulls and 2 points for the Bears. So that makes things a little bit tricky. What I think you want to do, guys, in a situation like this, have 2 watch lists going. On the first watch list, have things that you could get long. What are some things out there that fit your criteria for a really nice move higher? For me, that watch list would be names like Walmart. I'd love to buy Walmart on the dip. Got a really nice 2-day squeeze. I even think you've got Pinterest. Pinterest shapes up again, gets another daily buy signal. It's going to be another nice setup. You have names like O'Reilly. O'Reilly. That's a really nice squeeze. Brand new daily buy signal. You got all the buy signals on lower time frames. 2-hour squeeze, 4-hour squeeze, daily, 2-day, 3-day, and weekly. Again, if we're in a May, June kind of market, I'm going to trade that, and I'm going to trade it aggressively. And I'm probably going to buy it as soon as the market opens this morning. I have everything I need, a good market and a really good setup. So Walmart, Pinterest, O'Reilly. I think last week we saw LYB. LYB not too bad. And then you have a lot of squeezes that are neutral that could turn into a bull squeeze. Take Meta, for example. Meta has a 30-minute, 1-hour, 2-hour, daily, 2-day, and a 3-day squeeze. To our benefit, we found these squeezes nice and early. And from here, it's pretty simple. If September, October, November sees the QQQ taking out the high, Qs are up here at 390. Very good chance. Really, really good chance. That daily, 2-day, 3-day squeeze in Meta should fire to the upside. The QQQ rolls over and takes out the lows. There's maybe a 1% chance that Meta actually fires to the upside. Down goes the QQQ. Most likely down goes all of these squeezes. You have Amazon, the big zone. 2-hour squeeze, daily squeeze, a 2-day, and a 3-day. And check out the 3-day. The 3-day squeezes, it's pretty much perfect. Really good trend, good structure. Everything checks out. We got the perfect scoreboard. If next week the QQQ takes out the low, really tough to imagine that 3-day squeeze or the 2-day or the daily. Tough to imagine they fire to the upside. So for now, that goes on to your watch list. I've got a 3-day squeeze. I have a buy signal. I found a setup that should make a move higher if the market allows for it. You throw that on your bullish watch list, and then you spend the next few days, next few weeks looking for confirmation from the market. Is the market going to allow all of the things on my bullish watch list to work? If the S&Ps, the Qs are under key moving averages, we have sell signals, they're probably not going to work. So Meta, Amazon, about a little Microsoft. Daily squeeze just fired. It's coiled up in a 3-day squeeze, and then check this out. Check this bad boy out. It also has a brand new weekly squeeze in a weekly chart that behaves like an uptrend. Nice push, pulls back to the 21, continuation, pulls back to a 21, brand new squeeze. You get some buy signals coming through, and you get a good market. The weekly squeeze should take you back towards those highs eventually. But if the Qs fall apart, the S&Ps fall apart, there's pretty much no chance that weekly squeeze fires long. So for now, you throw it on your watch list. So Pinterest, Walmart's, LYBs, Microsoft's, Meta's, Amazon's. I think even Netflix. I believe Netflix has got some big boy squeezes as well. Yeah, 2-day squeeze, a 3-day squeeze. Right, so keep that. Have one watch list or things like that going. Squeezes, buy signals, good trend. Things that in a good market should go higher. And then curate a watch list of the opposite. If the S&Ps fall apart, if the Qs take out the lows, if everything just starts going lower, can I find a few setups right now that are already poised for a big flush? And there's a few out there. You have ADI. Grab the daily chart. The indicator says ADI is the perfect short. Right, top shelf A+ setup. S&Ps and the Qs take out the highs this week. This trade probably does not work. So you throw that on your watch list. Then you get confirmation from the indices that things do want to go lower. You have something to short. You got ADI, you have Target. Got names like VRTX. And a few more. So that, my friends, is my biggest advice. It starts with recognizing that we're not in a trend. So we have to make some adjustments here between how we traded the market back here and how we're going to trade it now. I think 2 of those adjustments being 1, be a little bit quicker to take your profits, and then 2, think in terms of your overall account. All right, don't make it all about that one given trade. If closing your current open trade allows you to keep the profits in the trades you already closed, that's a good business decision in this market. And then build up your 2 watch lists and then play the over-under game. So on my bullish watch list, I have, I got Walmart, Pinterest, I've got the Googles, the Microsofts, etc. And then I've got my bear watch list. And we got ADIs, things of that nature. Build those 2 watch lists and then play the over-under game. Over-under game meaning you take your S&Ps. Are we above or below the 21 EMA? Are we above or below the 50 SMA? If we're above the 21, we're above the 50, and the scoreboard favors the bulls, then I think you're looking towards your bullish watch list. If we are under the 21, under the 50, and the scoreboard favors the bears, then I think you're focusing on your bearish watch list. And then last piece of advice would be potentially looking for your trades across lower time frames. Going back to last Friday, I did the open in the options room. Market opened. As soon as the market opened, we found a nice 5-minute squeeze on the S&Ps. Now that 5-minute squeeze from Friday's open, it's the same exact setup that I love to trade on the weekly chart, the 2-day chart, and the daily chart. 5-minute squeeze, 5-minute buy signal. On the 5-minute chart, it was an A+ setup. In a market that lacks trend, you're going to find a lot more of these. The 5-minute squeeze doesn't require the market rallies for 2, 3, 4, 5, 10 days. To make some decent cash on a 5-minute squeeze, or a 15-minute, 30-minute, whatever the case may be, you just need a nice push out of that squeeze. So take consideration to that as well. If price is above the daily 50, above the daily 21, and the scoreboard favors the bulls, I might go look for my trades and my entries on 5-minute, 15-minute, 30-minute, hourly charts. It's a little tougher to find that A+ setup on a weekly chart, on a daily chart, in a choppy market. You'll still find them left and right across your lower time frames. If the S&Ps are below the 50, below the 21 EMA, scoreboard favors the bears, then I might look for my trades, my entries on a 5-minute, 15-minute, 30-minute bear squeeze. All right, T. And yeah, with that being said, the future is bouncing here a little bit. So if we took that rule of thumb on the futures, we're kind of at a standstill, guys. Are we above or below the 21 EMA? Well, we are above it. Are we above or below the 50? Well, we're still below it. Does the scoreboard favor the bulls or does it favor the bears? It doesn't favor either. That's kind of tough to call for a trade in. They get it above the 50. The bulls take a little bit of a lead. All right, now I can try to play for that push higher. So patience, patience, y'all. Patience, patience. All right, looks like I got a flash flood warning in my area. Y'all wish me luck in this flash flood. But all right, guys and gals, any questions, anything you want to take a look at, please throw it on over, and I'll see what you got. So, Lori, that's part of the brand new free squeeze bundle. So the class that I just did and the bundle we just released. Well, the bundle included everything, actually. So the buy and the sell signals plotted on the charts, the brand new squeeze histogram, the squeeze signals, the labels, these labels, and then these labels. They're all part of a bundle for the brand new Big 3 squeeze class. Yeah, Savvy Trader, rumor has it, Tesla is doing some Tesla things this morning. Nice move. Wow. Yeah, 264-ish at the open. I've been watching it last week. Notice how hard they slam it down at 260? Like the Kembe Mutombo, just boom. They slam it, but then notice how hard somebody's picking it up around that 245. Like, yep, we'll take it. And they slam it again. Yep, we'll take it. They slam it again. They'll take it. They'll take it. And now today they're finally getting that breakout. We'll see what's up with that bad boy. They just crossed momentum as well. They just got the positive cross. So now potentially you're getting the breakout. And the bulls have got a fresh tank of gas to work with. Usually a pretty good combo. Mike, a few things that look like good shorts right now. One would be ADI. We got an A plus setup on ADI. There is VRTX, brand new bear squeeze signal. There's names like Target. And that was kind of the bulk of it as far as ones that were, really sticking out. And then, guys, for what it's worth, these are all going to work if the S&Ps go lower. Or let me reword that. They should all work if the S&Ps roll over. So you could just say, hey, I'm going to short the S&Ps. Going to wait till they're at my level. Going to wait until I get some sell signals. And then I'm just taking the short on the index versus on the individual stock. If one of those trades works, usually means both of them worked. This week, ADI falls apart. Target falls apart. VRTX rolls over. There's a pretty good chance the S&Ps weren't rallying. So, as goes the market, goes the stocks. Yeah, MP, I was just saying if Pinterest does clean things up. Yeah, that wouldn't get my interest this morning. But I'm saying if later tomorrow it looks again like it did last week, then you have the same trade. But yeah, good eye, right? We would not want to buy that right now. Reason one, after Friday's close, it's no longer an A plus setup. Now let's pretend it still is an A plus setup. Well, we don't quite have that multi-time frame alignment. A couple things are neutral, a couple things are that big bad red. So until that changes, yeah, you would stay clear. Good eye, my friend. Good eye. Good morning, guys. Thank you for all the good mornings. Yeah, Wemby. Let's see what's up with Wemby this year, Renee. Talk about a specimen, huh? 7 foot something. So TRO, really good question. So should we sell a credit spread or buy a put? So we had actually talked about this in the master. And the example we used yesterday was the hourly squeeze here on the S&Ps. Just as an example. So, say you're looking for a short. For sake of discussion, let's say the target on the short is 4,400. So at the moment, I have an A plus setup, and this will change at the open with the gap up. But I've got an A plus setup for a short. Sake of discussion, let's say I'm looking for 4,400. And now my exit on the trade is 4,480. If we get back above the daily 50 SMA, I don't want to be short. So you've got the setup, you've got your triggers, you've got your levels. And now the question in terms of, all right, how do I trade this through the options? To me, just simply comes down to risk versus reward. Excuse me. Where if this trade, say, expires on Friday, then what I want to know is every day up until then. So today, Tuesday, Wednesday, Thursday, Friday, every day, what is my risk versus reward between a move to my target or a move up to my exit? Over the course of Monday, Tuesday, Wednesday, Thursday, which of those trades will give me a better risk versus reward? Is it selling that call credit spread or is it buying that put? And I should have these in the Analyze tab still. Let me see. Analyze. All right, perfect. So let's say we do the 4480, 4500 call credit spread. So Friday expiration call credit spread, $20 wide. Max loss is 1,200. Max profit is 750. We're not concerned about best case scenario, worst case scenario. I'm concerned with the open P&L between my two levels. My downside target of 4,400, my exit of 4,480. So my only concern is ratio between those two levels. Now, if we take the trade today, we do it at the open, and then by the close, we're pushing through 4,480. This might be all jacked up, guys, because we're pre-market. Yeah, it's all jacked up because we're pre-market. What I was going to show you was the benefit of doing the call credit spread is that every day that passes, Tuesday, Wednesday, Thursday, your risk reward gets better. So Tuesday, Wednesday, Thursday, the closer we get to expiration, the better the risk versus reward between those two levels. Where if come Thursday, for example, the trade goes against us, we might be break even. Reason being was you sold those out the money calls, and now Monday, Tuesday, Wednesday, Thursday, they've been losing premium in your favor. So Thursday or Friday, the trade goes against you, you might be break even. Thursday or Friday, you hit your target, you have basically a max profit. Thursday, Friday, you have a max profit pretty much anywhere under 4,480. So while the downside of doing the call credit spread, or the quote-unquote downside, is that you've capped your potential, right? You can only make so much. The market gap's down 30% tomorrow. You're only going to make so much. The benefit being the closer you get to expiration, the better the risk versus reward between those two levels. Now, the opposite is true if you buy that put. If I buy a 4,480 put, for example, if the trade works immediately, meaning Monday, Tuesday, I catch the flush to 4,400, then hallelujah. If I bought puts that expire in a few days and I caught the flush, they're going up 100, 200, 300%. Like they're going to explode. And that, of course, is the attraction of those shorter dated options. However, God forbid, Tuesday, Wednesday, Thursday, we haven't caught the flush, and we're doing anything other than flushing. Now that premium decay is working against me. Being short the 4,480 call, premium decay works in my favor. Time is my friend. Buying the 4,480 put, time is not my friend. Theta is working against me. When we're in a really good market, really good meaning we have a good trend, the only thing I want to do is buy the calls or buy the puts. I'll go at the money. I'll go a couple strikes in the money. That's all I want to do. In a great market, on a great setup, I don't want to cap my potential. In a bit more of a choppy market, I think a lot to be said for, hey, I'm going to sell these calls. All right, I'm going to sell the 4,480 call. And if we trade sideways, I'm going to make money. If we puke, I'm going to make money. If we go lower, but we do it in a slow fashion, I'm going to make money. If we go a little bit higher, I'm still going to make money. Buying the put is a total opposite trade. If I buy that 4,480, there's only one move out there that's going to leave me with a profit. The market has to flush. It goes up a little bit, no good. It goes sideways, no good. If it goes down too slowly, that can be no good as well. So great question. Savvy Trader's got some SO. Yeah, I think I saw that on the scans as well. I believe I did. Yep. That fits the bill. The only thing I'm wondering is, are they going to go for the short squeeze? Are they going to try to go for the short squeeze? Notice how, was it the 24th? Yeah, so notice how back on the 24th, you had a big flush the previous day, and then think of the emotions behind that flush. Oh my God, here comes the end of the world. I got to sell my calls. I got to buy puts. A little bit of panic starts to hit the market. Now imagine the following morning where the market opens and dumps under that low. Now people are really panicking. I got to sell my calls. I need more puts. Right? We're taking out yesterday's low. Here comes the big one. They paint the picture of a huge breakdown. They say, come on in, y'all. The water's warm. They set the trap back above the low, and off they go. Right? They rope them in. They squeeze them out. So I don't think we're seeing the same velocity just yet. But what I am looking at potentially is if the Bulls can really try to push here today. You had a little bit of the same dynamic last week. Put in a low. Following morning, take out the low. Get everybody into the puts. And then buy the close. They're kind of trying to set that trap. So you can imagine if you got short back here, the last thing you want to see today is a move back above that daily 50. That's where a lot of shorts are going to say, all right, I'm wrong. I can no longer handle the pain. And now I got to throw in the towel and probably get long. All right, now I've got FOMO. Not only am I losing money, I'm missing out on the move higher. So that action on both ends, people covering their shorts, people trying to get long, can give you some action, kind of like you had back here. So little something to keep an eye on. Mike, please teach how to find them. I'm not too sure what you mean by that. If you mean how to find the setups, Mike, that would be from the scans. We have the scans for the bull squeezes, so a squeeze of the buy signal, and then we have the scans for the bear squeezes. If we're thinking swing trading, we can look at weekly charts, daily charts. If we're thinking a bit more day trading, we can look towards those 5-minute, 15-minute, 30 minutes. But all right, guys, cash market is going to open up in about 3 minutes here. So I will let y'all go, and I'm going to buckle down and look for a few trades here for the Mastery folks. But as always, thank you for your time this morning. Apologies for not getting to all of the questions, but I will be back on Wednesday. And technically, Wednesday is my day off, so Wednesday will start a little bit earlier, and I can hang out for a little bit longer. All right, y'all, let's make it a good week. Mind your P's and Q's when it comes to risk and things of that nature. And then, yeah, my advice would be keep 2 watch lists. A couple things that look good for a long, a couple bad boys that look good for a short, and then play the over-under game. Anchor to your daily chart. You want to keep it really simple. Anchor to your 21 EMA. If the S&Ps can get 2 closes above that 21 EMA, shift a bit more of your focus to your bullish watch list. If we continue to close under the 21 EMA, shift that focus to your bearish watch list. If we're not getting clarity, and it kind of looks like this, we're stuck, scoreboard's tied, then be patient. Wait until you get your edge. But all right, y'all have a good day, and I will see you on Wednesday morning. Adios.